Hey, what's going on, you guys? I want to welcome you back to my channel. And in this video, we're going to show you guys how to calculate your risk according to your lot size when you're taking your trades with different positions. We're going to provide you guys with a position size calculator, and we're going to show you guys how to manage this on your own. We're also going to show you each pair and how much each pair is worth according to the dollar. So we're going to go through every single pair because every single pair is not a dollar for dollar. We're going to show you which pairs have the most money, have the most bang for their buck. And we're going to show you some pairs that don't really have that much money. You guys are going to be surprised at what you see.
First we strategize, then we capitalize on what we see. Wanna go to Pip Value? Come join the Pip Academy and learn the Pip drill. Let's take the trip to Pip Value.
All right, guys, to start off, there are some free resources out there. One to consider is BabyPips.com. If you go to BabyPips.com, click on Tools, and go to Position Size Calculator. Here, they have a pretty good tool where you can actually calculate your risk depending on your account balance. You can do risk percentages and things like that. And so, you can choose your different currencies. You can choose your currency pair, different things like that, and it'll actually calculate your risk. But sometimes you might not have access to this. And so I'll show you guys how to calculate your risk according to a simple formula. But before we do that, let's jump into this risk management sheet that'll help you guys kind of see and actually preserve your capital. Let's get into it. All right, you guys, as you can see, I have this spreadsheet here with a couple of tabs. We have risk amount, and we also have Pip value for pairs. And I'm gonna break each tab down, and I'm gonna also provide you guys with this Google Sheet in the description, okay? So on this sheet, we have different amounts in capital, and we have different levels of risk. So let's say, for example, we had a $100 account, and we were risking 0.5%. It will literally take 200 losses before we actually blew that account, okay? And the same holds true if we were risking 1%, it'll take 100 losses. If we were risking 5%, it would take 20 losses before we actually blew that account. So you guys can see how using proper risk management can help you preserve your capital as opposed to blowing your capital with, one or two trades with some unnecessary lot size that, we didn't plan for. Now you have some individuals that say you use 0.01 per $100 that's in your account. That's fine and cool, but how does that relate to if you have a different stop loss? For example, what if you have 15 pips and you were risking, let's say you had a $300 account and you were risking 3%. You were risking $9 on every single trade and your stop loss was 15 pips. Would you choose a 0.03? If your stop loss was 15 pips, would you choose a 0.03 if your stop loss was 30 pips? If it was 20 pips? I have a simple formula for you guys that'll help you see or determine your actual lot size when you're actually taking a trade. Okay, let's jump into it. So a simple formula that you guys can use is your risk amount divided by your stop loss. So for example, let's say with that $300 account, 3% is equal to $9. Okay, so we have $9 and let's say our stop loss was 15 pips. We would say 9 divided by 15. Okay, so what is that? Let's go ahead and take a look. So if we had 9 divided by 15, that will give us a 0.6. Okay? Now, as you can see up here, what we want to do is move the decimal over 1, which will give us a lot size of a 0.06. Okay? And that's risking $9. All right, let's take a look on MT4. So as you can see here, we're on GU, and let's say we did a 0.06. We have a demo account here. And let's say we took a buy trade. No, let's say we took a sell, okay? And then we wanted to drag this up 15 pips. So as you guys can see, if I hover over it, it says 150 pips. However, that's equivalent to 15 pips. And if I hover over it, you see that it says $9. So we're risking $9. Okay. So now you guys can see how a simple formula, your risk amount divided by your stop loss, and then you want to move your decimal over one spot to be able to tell what your actual lot size is. Okay, so let's do another one. Let's say we had we were using a $50,000 account with a prop firm. Okay, 1% was our risk, which is $500. Okay, so let's say we were our stop loss was 22 pips for our SL. We would say 500 divided by 22. Okay, so let's break that down and see exactly what that is. We have 500 divided by 22 gives us 22.7. Okay, 22.7. Move our decimal over one spot. Our lot size is a 2.27 lot. Okay, now let's test that out on the charts. Okay, if we did a lot size of 2.27, let's say if we took a sell and we drug this up 22 pips, which will be right around 220. If we hover over this, you'll see it's around $499.40. Okay, give or take, but that's still right around our risk area where we actually want to be. Our risk is $500. We took 22 pips. Okay. All right, you guys. So let's look at another example. So we're currently here on the charts on NZD Chef, and you can see right now we've had a 15-minute break of structure. And for most people who know how we trade here at the Pips Academy, we trade supply and demand a lot. So one of the things that I noticed is that we have a 15-minute demand zone here. And so in this area, a potential entry could be right here on the 15-minute. Stop loss can possibly be under this price action here. As you can see, that's right around 25 pips or so, and we can ride price up to this 15-minute high here. But we can see the risk to reward is not that great. And so some of you guys have been following us for a while. You understand this is an order block. And so what we can do is take a 50% GAN box on this order block here, and we can utilize that as an entry as well. This is our 50% order block strategy. Okay, stop loss in the same area, possibly riding price up to this area here. Now, looking at this, how does this relate to risk management? What we could do is we can say, okay, in this area, we can take a 0.5% entry on this one, and we can do the same here. That way, when you look at this, put a plus in the middle, and this can equal to 1%. Okay, so basically what we can do, we can use our formula on here and say, let's say for example, we had a $50,000 account. Okay, and we knew that 1% risk is $500. So what we can do, we can divide that 500 by 2, and we can say each entry we want to risk $250. Okay, let's go ahead and make that a little bigger. Each entry we want to risk $250. So here we'll risk $250, and here we'll risk $250, which total out to $500. So we pretty much can use our formula. We can say 250 divided by 24.9. That'll give us our stop loss. That'll give us our lot size. And then we can say 250 divided by 16.6. and that'll give us our lot size for this as well. So total within this, we'll be risking 1%. That's how you actually split the risk, but still maintain your risk management, but also possibly not miss this particular trade. Okay. All right, you guys. So going back to our Google sheet, and we're on the Pip value for pairs now. And so if you notice that we have each pair, and each pair has different values. Some are dollar for dollar, some are less than $1, and some are more. And I'll explain what I mean by that. So if we filter this out, most pairs versus the US dollar are dollar for dollar. And what do I mean by that? If you take a 0.1 lot size, that will be $1 per pip for each one of these pairs. But you have some pairs that are actually less than $1, and you'll be surprised at which ones are. If you notice throughout this, most of these pairs are 76, 74 cent, things like that. For example, GA, which is a famous pair that a lot of people trade, is only 0.78. So if you took a 0.1 lot size, you would only get 78 cents per pip with this particular pair. You literally will have to take a 0.14 in order to be dollar for dollar for that particular pair. Here's another famous one that people trade, GJ. It's only 0.74 cents per pip. And again, with this one, you would literally have to take a 0.14 lot size in order to be dollar for dollar with this particular pair. USD CAD, that's 75 cents. You even have Euro AUD, which is only 69 cents. Look at this. The Aussie dollar versus New Zealand is 63 cents per pip. You have to take a 0.16 to be dollar for dollar with this particular pair. Okay, so now let's look at some of those pairs that are actually more than $1. And most of those are pairs that are against the Swiss franc or the chef. So as you can see, most of those are $1.08 per pip whenever you take a 0.1. So we have those anomalies like NZD chef, which is $1.11, and we have the euro versus the pound, which is $1.20. This is the most this pair here, you can get the most bang for your buck. These two are the most money pairs within the Forex market. But then you have your indices, things like US 30, NAS 100, things like that. These are 0.01, which is $1 for dollar per pip. So these are your big monies. You can't even necessarily take trades with these particular pairs unless you have a certain amount of capital to actually trade with. Okay, so that's something to be mindful of. All right, so now let's go back to the iPad and let's look how we can leverage these different pip values with our formula. So let's say we were back to that $300 account and we were doing 3%, which equals to $9. Okay, and let's say we were trading Euro GBP. Okay, and we know that is $1.20, per 0.1 lot. Okay, so what we would do, let's say if we were, our stop loss was 15 pips, we would say, okay, 1.20 times 15. Let's see what that'll give us. 1.20. Oh. All right, so 1.20 times 15. That'll give us 18. Okay, so now what we want to do, we want to say 9 divided by 18 equals 0.5. Okay, go back to our iPad. We came up with a 0.5. So basically we want to move our decimal. 0.05 is our lot for 15 pips. So now let's go back to our screen and let's test that out on EG. here, 0.05. Okay, let's say if we took a buy and we drug this down 15 pips. Okay, if we drug that down, you can see that's about $9.12, give or take, so right around that area, but it's still right around the pip area, or the risk that we're trying to actually risk. Okay, so that's how you actually calculate those different pairs that have different pip values. You know, the same holds true for those that are less as well. So the simple formula, let's recap. The simple formula for that would be, you know, if it's more, for example, e.g. 120 times your stop loss, whatever that gives you. For example, if it was 15 pips, that came out to 18. And basically what you would do is you would say your risk amount divided by 18. Okay, that's what you would do. All right, let's go ahead and recap, you guys. All right, you guys, so looking at this, just to recap for our formula, it'll be the risk amount divided by our stop loss, which equal our lot size. And then we want to remember to move our decimal over one space to the left. So example, if we were risking 1% of $500, which is 500, I'm sorry. If we were risking 1% of $500, which is $5, our stop loss equals 15. We'll say $5 divided by 15, which is our stop loss, and that'll equal 0.3. Move our decimal over one place to the left, which will give us a 0.03 lot. Now, if we're looking at different pairs with different values, the formula for that will be our pip value multiplied by our stop loss, which will give us our new stop loss. For example, 0.74, which is the pip value per 0.1 lot for GJ, times 15, which is our SL, which will give us our new stop loss. Then we will utilize our normal formula. We'll take the risk amount, which is $5, divided by our new stop loss. That'll equal our lot size, and we want to move our decimal over one space. Example, $5, which is our risk amount, divided by our new stop loss, which will give us a 0.45. Move our decimal over one place to the left, which will give us a 0.04 for this particular lot. Hey, you guys, I hope this was informative, and I'd like to thank you for watching.
First we strategize, then we capitalize on what we see. Wanna go to Pitville? Come join the Pip Academy and learn the Pip drill. Let's take the trip to Pitville.